So it's been about 2 weeks since Liberation Day. There's been a lot of confusion, obviously. Everything's back and forth, up and down. We've gotten a lot of questions from readers. So I wanted to just throw a few at you, starting with from the beginning. Why did gold go down right after the Liberation Day tariffs went into effect or were announced, and then come back up? Now it's again at all-time highs.
Because in times like that, everybody sells everything. Nobody knows what's going on. A lot of people don't remember 2008, big financial crash in 2008 in September, but a lot of people probably do remember the financial crash in COVID. And it's one of those things when there's this big sea change event, and everybody kind of looks and says, "Oh my God, this is that moment." People just dump everything. And the other thing to think about is you got to remember, it's not even human beings making these decisions in many cases. It's just programmed algorithms and now AI that are making these trading decisions. Then you've got hedge funds that have to worry about their numbers, and so they go, "Oh my God, we're going to take a massive hit on our stock portfolio, but boy, are we up big time on gold." Oh, we've been reading Shift Sovereign. We bought gold when it was like $1,500 an ounce, and now it's 3,000. So we're up big, and so we got to lock in those gains because we know we're going to take a huge hit on our stock portfolio. So they sell stuff that they're up on, they sell stuff that they're down on to kind of equalize that, even that stuff out. So there's a lot of different reasons why. Again, some is because hedge funds want to just lock in certain gains and positions so they don't erode their own fees. Some of it's just algorithmic trading. Some is just the knee-jerk reaction of, I don't know what's going on, so I got to sell everything. So in those first couple of days, gold went down. And now obviously people kind of caught their legs and realized this is basically a reset of the global financial system. And so what's one of the only assets in which I can truly have confidence? And that's gold. And I'm not saying that because I'm a gold bug. I'm not a bug on anything. I don't have an irrational emotional attachment to anything except for my kids. The reality is that gold has this 5,000-year history of tradition, marketability, value, and it still does to this day. Most central banks around the world already own it. Most foreign governments around the world already own it. And so when you've got all these foreign governments and central banks around the world going, holy cow, I don't know if the US is going to be, the dollar is going to be the global reserve currency this time next year as a result of all this stuff going on. What am I going to do? I got to figure something out. They go and buy gold.
Yeah, and there was an opportunity to pick it up for under $3,000, already up 10% from that. So not a bad
Right.
buy the dip move.
Right. And, investors as well, funds, even individual investors, people look at it and it's, gold is traditionally viewed as the safe haven asset. And so gold went up a lot in value. The other thing that's traditionally viewed as a safe haven asset is U.S. Treasuries. And Treasuries fell. Treasuries became less valuable. And if you don't understand the bond market, the thing you just got to understand is that when yields go up, it basically means that the price of bonds goes down. They move inversely to one another. And so we saw yields going up. And what that meant was that bonds were becoming less and less valuable. In other words, people were selling bonds. They were dumping U.S. government bonds and not buying them. And so the supposed safe haven asset, usually when these things, when the proverbial hits the fan, people pile into U.S. government bonds. And that, again, happened for like the first day or two. And then people started dumping U.S. government bonds as the safe haven asset, and yields went through the roof as a result. So it was an interesting time. But I mean, at this point now, gold is doing in many respects exactly what it's supposed to do and what it has been doing for 5,000 years. So that's the reason.
Remember the book Anti-Fragile by Nassim Nicholas Taleb? He had this thing about how you can expect something to last about as long as it has already lasted. So you should expect to be about in the middle of any sort of movement. And I just think of that with gold. You could expect gold to hold its value for another 5,000 years based on the trajectory.
Yeah, I got to say, man, I don't believe in that. I don't believe that at all. I mean, Mr. Taleb is a very smart guy, but that's one of these things people repeat a lot. There's no reason to believe that that's true. It's a little bit like Moore's law in a way in technology, and people kind of hang their hat on that, and there's some validity to it. And I think you could find a lot of empirical evidence, a lot of observations, say, well, this happened and then it lasted that long. But there's no reason to actually think that's true. Just because something's lasted for 5,000 years doesn't mean it can't come to a screeching halt tomorrow. The point with all of it is catalysts. Is there a catalyst? Is there a catalyst on the horizon? And with gold, I don't think there's any catalyst on the horizon that would all of a sudden make gold no longer valuable to central bankers and foreign governments as a reserve asset. Now, just because it's been one for 5,000 years doesn't mean that gold's going to be a reserve asset for another 5,000 years. That's ludicrous, because I think over the next 5,000 years, I mean, man, there's so much technology that's available. They're going to figure out how to mine gold off of asteroids. Gold's going to become so abundant. They're going to be able to synthesize it in a laboratory.
Alchemy.
Right, exactly. I mean, all sorts of, it's going to be what alchemists in the Dark Ages were trying to do. They're going to be able to figure out how to do that, synthesize it, mine it off of asteroids, pull it out of, pull it out of nanoparticles in the soil, all sorts of things, right? And the abundance, the extreme abundance of gold is going to make it utterly worthless. And when that happens, I think the world's going to be in a pretty good shape. Going to be in pretty good shape at that point by the time that happens. But
things should be good enough that it won't matter.
It's not going to matter, right? It's not going to matter. And so the fact that like gold's going to last another 5,000 years, I think is actually kind of ludicrous as a reserve asset. Just because Taleb says so doesn't mean that it's true. I mean, again, with due respect, like I just don't buy that.
Interesting point. Speaking of bonds, though, somebody was asking that they understood, rightly or wrongly, that foreign countries don't actually own their bonds and that the financial transactions are held by a third party that's controlled by the United States. Do you know, is that true, what this person's talking about?
Yeah, I mean, when Britain buys U.S. government bonds, Britain owns U.S. government bonds. Britain would have paid money, essentially loaned money to the federal government, bought those bonds. Sometimes it might be an intermediary, in some respects, maybe some financial institution, a primary dealer, a broker, somebody in the United States under the US financial system that would have brokered that sale. But at the end of the day, there's just pretty clear who the counterparty is. The US owes money to the British government, the US owes money to the South African government, the Costa Rican government, whoever it is buying these bonds. There are certain instances, though, the Treasury Department knows this, and you can look this up for yourself. There's actually a report that the Treasury Department puts out, the major foreign holders report. They've kind of amalgamated this into some other things, but the major foreign holders of U.S. Treasuries, they actually outline it. They say they've got the oil producing nations, and there's whatever, Australia, and everybody's sort of lined up there, and how much money the U.S. government owes those countries. So it's all there. I mean, the Treasury Department acknowledges this. The thing that's kind of interesting, though, is that in some instances, countries and some buyers of bonds do try and mask their holdings. And this is the part that's so ironic, because it's actually illegal for a bank to do this. Banks, not just in the United States, but around the world, are required by US law, which is weird, right? Because you have US law that's regulating foreign financial institutions. A bank in Hong Kong has to abide by US banking law. It's so weird. And the federal government of the United States compels every financial institution in the world to follow what they call know your customer, KYC rules. So at the end of the day, basically means this: you can't go to a bank with some company, right, and say, oh, I've got XYZ company, XYZ LLC, and open up a bank account in the name of that company without the bank drilling through that whole structure, right? And people come up with all kinds of fancy pants structures. They go, I got this company is owned by another company, is owned by this company in the Seychelles, is owned by this company, is owned by this trust in Malta, whatever. It's like, forget it. At the end of the day, the bank has to know, they got to look through all that structure and say, who's the dude, who's the human being at the very end of this structure that they call the UBO, the ultimate beneficial owner, the main stakeholder who's pulling the strings behind all of that. A bank anywhere in the world is required by law to know who that is. They have to know who that end user, that UBO is. The U.S. Treasury Department, on the other hand, does not. The Treasury Department does not follow its own KYC rules that the rest of the banking system has to follow. So the Treasury Department, at the end of the day, they might go, oh, we owe money to, whatever, Australia. But it turns out that maybe some of that money that Australia used to buy U.S. Treasuries actually came from China. And the Treasury Department doesn't know that. And in fact, there's one particularly suspicious country that's got a ton of treasuries, and that's Belgium. And Belgium, like all of a sudden, this is a couple of years ago, overnight, they went from having this tiny little bit of treasuries to having this massive quantity of U.S. Treasury ownership, like overnight. And the rumor around the campfire was that it was actually Russia that had dumped a lot of treasuries into Belgium. And the Chinese looked at it and said, oh, wow, that's very clever. And so the Chinese started funneling a lot of money into Belgium. And so there's different places in Europe that different countries that basically are conduits for other countries to buy US Treasuries. And so there's some of that going along, but there's no like sort of middleman in the US necessarily. It's like holding on to like all these Chinese, bonds, these Chinese owned US government treasuries. There's no like middleman in the US that's owning those. That money is owed to China. Full stop. The money that the British government has loaned to the United States, that money is owed to the British government. Full stop. That's the deal.
The U.S. can, though, freeze assets when it sanctions Russia, for example. Russia couldn't sell its bonds. Is that correct?
Yeah. So in many respects, when you think about freezing assets, it's very clever, right? Because the US government has supposedly never actually defaulted on its debt. It's technically not true because when you change the mechanism by which you repay somebody, which they did after Nixon closed the gold window, et cetera. I mean, in theory, that should constitute a default, and things like this have happened a couple of times technically, but they haven't actually gone out and said, "Well, we're not going to pay you." Right? So that's what a default is. Well, we're just not going to pay you. But what they do is they freeze the assets, which isn't that kind of a default. We're basically saying, well, we're not going to pay you. We're not going to give you this money. Somebody says, well, hey, my bond matured. I want my money back. They say, no, we've sanctioned you. Well, isn't that the same as a default? But they don't call it a default. They call it a sanction. They just say, oh, well, so this is where I think the trade war, which I've been very clear is not a trade war. This is full-blown economic warfare. And this is one of the things that I think in the ways in which it can escalate is by more sanctions, where they actually go out and they sanction the CCP and they selectively, it's essentially a selective default. And they say, we're not going to pay these bonds back to the CCP, right? Because now they see China's out dumping treasuries and they want to prevent that. So they're going to say, oh, well, we're going to freeze these. We're going to sanction these, essentially preventing the Chinese from being able to do any further damage to the Treasury Department, to be able to prevent them from doing any damage to interest rates, causing interest rates to spike. So this is the sort of thing that does happen from time to time. They do sanction countries. They started this big time again. They did it for a long time, really. The first big powers of sanction came after 9/11 and the Patriot Act, and they were sanctioning a lot of terrorist groups, and then it became entire countries. As we saw in 2022, they've done it with Iran, they've done it with Russia, and I would be surprised for them to do this with the Chinese. Does that answer the question, or we get a little bit off topic?
Well, I think the question is really just who's controlling that money or those financial transactions. If the other country if the United States wanted to stop China from selling its US debt, could it? And you're saying through sanctions it could.
Sure. Yeah, exactly. And the way sanctions work is they kind of jump up and down and wave their hands in the air and they say, all right, well, we're not doing business with China anymore, and we're not going to allow anybody else to do business with China anymore. Which, as we wrote about the other day, this is Napoleon's continental blockade all over again against the United Kingdom, right? In the early 1800s, Napoleon decided that he wanted to economically isolate his arch nemesis. And so he imposed this blockade which said, nobody in Europe is allowed to trade with Britain. And he's pointing the finger at everybody. He said, I'm talking to you, Sweden. I'm talking to you, Russia. I'm talking to all these other countries that he didn't necessarily fully control their territory, but he put a lot of pressure on them. And this is what the U.S. does. The U.S. sanctioned Russia, and they went to Europe and they said, I'm looking at you, Europe. You can't do business with them anymore. So all these countries around the world, I mean, we were in a deal with it still is actually an incredibly successful business. And they're an e-commerce startup based in sort of Central Asia. And they got hit by this. They have nothing to do with the United States. They have no like U.S. transactions. They don't do U.S. customers, whatever. But they were doing a deal with a Russian bank at the time, a big financing deal. And all of a sudden, it's like, here you have this company. They do business in like Uzbekistan and Kazakhstan and these different places. And suddenly they're like, oh man, we can't take this money from this big Russian bank, this Russian foreign investor, because of the sanctions that were imposed by the United States. So that's how this stuff works, is that all of a sudden the Chinese go, we have this asset, we want to sell it. And the rest of the world feels compelled to not do business with them. So they're like, well, if China's selling this asset, we can't really buy it. And this is where you get into the idea of having intermediaries. Well, what about assets that aren't, China's the ultimate beneficial owner, but maybe they're actually being held by Belgium. So now it's Belgium that's selling assets. So, maybe some of those, you find these little backdoor maneuvers to get around some of the sanctions and things like that.
And frankly, bond laundering.
Well, it is. I mean, these types of things have actually existed for a long time. And a lot of that is actually because governments themselves need backdoors to do deals with one another. They need, intelligence agencies. You think about all the light that's been shed on sort of tax havens and dark money havens and these sorts of things. Governments actually need that stuff. They need jurisdictions. I mean, like, remember when I think they called was it the Panama Papers or the Paradise Papers, or maybe it was both of those things that came out. And they were talking about all these tax havens, and then everybody said, "Oh, tax havens bad." The governments around the world actually need tax havens. And there's a place, I think it was Nehru, that actually became like one of the top meeting places. There was this like one hotel in Nehru where like all the foreign intelligence guys, all the Russians, all the KGB spies, and all the guys from the CIA, everybody'd be out hanging out by the pool. And they'd have to go
Oh
and
yeah,
travel this place to set up their dummy shell foreign companies. So they go and
Nauru.
do this. Yeah, Nairo, yeah, and do this like sort of illicit trade and business and stuff, because they need. I mean, these guys actually, they need secrecy. They need this stuff, so they need places that sort of that sort of cloud the ultimate beneficiaries and all this sort of stuff. They need that stuff. They need those jurisdictions. But sanctions still, at the end of the day, they have like a big effect, and so the U.S. does have the ability to sort of make it known that you're not allowed to buy these assets from the Chinese, and most of the world is going to comply with that. Some people aren't. Right. In the same way that they made this proclamation, they said nobody's allowed to buy Russian oil. And you have India go, yeah, we'll see about that, buddy. I mean, China did the same thing. A lot of people just ignored U.S. sanctions on Russia. And I think you'd probably see the same thing with respect to the Chinese. Now, in this case, because it's treasuries and it's the U.S. itself saying, this is our product, we don't want you to buy this from the Chinese. A lot of people aren't going to buy that, because if the U.S. finds out like, oh, you bought this Chinese owned U.S. government bond, then the U.S. said, well, we told you not to buy it. Now we're not going to pay you. So they actually have some leverage. They have some muscle in that situation.
Yeah, it sounds like free trade is going to shine through in some level or not. There's going to be a black market at a high level. I mean, we understand this when drugs are banned and drugs still make it into the country somehow. And it's the same sort of thing is going to happen at a high level.
Yeah, Peter was talking about this actually the other day with respect to opioids, and he was saying, not only do they get into the U.S., they get into U.S. prisons. They
Right.
actually people smuggle opioids into places where there are bars and guns and guards, and they still manage to smuggle this stuff into prisons in the United States. So not only do they get it past the border, past the customs officials, past CBP, they get it into the prisons, past the guards, past all that. So it's like, black markets thrive everywhere. People always figure out a way. Smuggling is one of the most ingenious things. I mean, and it's been around for thousands of years. There have been smugglers since there have been governments regulating what can and cannot go in and out of that kingdom and that domain. And for thousands of years, smugglers have been like, yeah, we're going to ignore that. And they get very, very clever in the ways that they do that stuff. So it's the same thing. And governments actually do need that stuff. And they need those sort of those back doors to even be able to trade financial securities with one another.
Yeah. So last week you wrote an article about Stephen Miran, the chair of the Council of Economic Advisors. It's one of the main positions in the Trump administration right now that was arguing for these tariffs. One of the things that he said in that speech was that the debt could be costly for the United States to provide for the rest of the world. The US is providing those dollars. A lot of countries are getting their hands on those dollars by buying US debt. And he's saying that's costly to provide. And you laughed about that and said, well, they're buying our debt. That's not costly. That's funding the United States debt. Is there another way, though, that could be costly, this idea of the Triffin's dilemma, where in the long term, having that global reserve does end up having negative effects on the country, in this case, the United States?
Yeah, look, you're right. Moran's one of the most powerful people in the government right now. He has the ear to the president. They see eye to eye on these things, or at least appear to, and that they both believe that tariffs are great. Tariff is a beautiful word. Tariffs raise revenue, all this sort of stuff. And I wrote something the other day and basically said some of this is absolutely delusional. Some of it's actually pretty smart. And, look, I can't help myself. We always have to be intellectually honest, brutally honest. And some of this stuff actually is just completely delusional. And one of the things that I said, I still can't believe that he actually said this out loud. And he was complaining that, the U.S. provides these things, they call them global public goods, including reserve assets and global security. And he said, basically, well, we think the rest of the world should just write us a check. And he actually said that. I think that these other countries could just write a check to the Treasury Department to pay their fair share. And it's like, did you actually and they actually used the term fair share, like it's Bernie Sanders and AOC It's the same mentality. It's this Bernie Sanders, AOC, Lizzie Warren, Pocahontas mentality when they complain about the rich. And the thing that Bernie Sanders and AOC, they go, oh, Bezos is this evil guy, whatever. You go, and it's always hilarious when they complain about Bezos, because like, I guarantee you are using Amazon like today. You probably bought some shit on Amazon today, and you're complaining that Bezos is the worst guy in the world. It's like, then stop using his product, but you can't. You're addicted to it, right? I mean, it's so ridiculous, and they completely fail. Like, yeah, okay, obviously, like, Bezos probably doesn't pay a lot of income tax because the income tax doesn't apply to him because he doesn't take a salary. When he sells his stock, he pays capital gains tax. And Bezos sold a lot of stock so he could pay for his rocket company and whatever. I'm sure he paid a lot of tax in his divorce. I got to say, hold on. Like, anybody that's ever been divorced is going to understand this. Like, for a guy to lose like tens of billions of dollars in a divorce, for his ex-wife then to get remarried to some other dude, and that guy is going to spend the rest of his life giving away Jeff Bezos's money, and Bezos is totally cool with it. Like, I'd go, like, how's that guy not won the Nobel Peace Prize? I mean, for like some ex-husband to see his
restraint
guy. Yeah, exactly. For the guy. I mean, he's got all the money in the world. Like, he could have smoked that guy a long time ago. Like, I mean, I don't know how could somebody have the equanimity to deal with that? He could have disappeared that guy a long time ago, and nobody would have been the wiser for it.
He's a stoic. He must be a stoic.
I can't imagine his headspace at what kind of meditation he's doing to sit back every day and watch this guy spend billions and billions of dollars that he didn't have anything to do with, that Jeff Bezos made, and his ex-wife's new husband is spending that money. To me, that's a higher level of existence. That is a higher level of existence to me.
You don't think the super yacht comforts him? Maybe the fact that he can go into
obviously
space whenever he wants.
he's got his
coming
new,
and he can escape.
Yeah, I guess so. He's gonna be looking down at his ex-wife's new husband, say, enjoy spending that money, man. Oh man. Anyways, look, I think that Jeff Bezos, clearly this guy follows the tax law. That's it. And if they want to change the law, then they can change the law. But the guy follows the tax law. When he sells his stock, he pays capital gains tax. He doesn't take a salary, so he doesn't have an income tax like most people would have an income tax. Somebody goes and they work at whatever, they pay income tax on their income. Bezos doesn't have the income. And they go, well, he's not paying his fair share. And they start inventing, the left invents math, right? And you saw this in that leak where they actually leaked his tax return. They leaked Elon's tax return, Warren Buffett's tax return, all these guys' tax return in ProPublica for the people. And in the whole thing, that in the ProPublica article, when they did this, they invented this math. They said, well, Bezos didn't really pay any income tax, but they said, but here's all the income that he earned, and he didn't pay any tax on that. And so they just invented a new way of calculating the income. And how do they do that? They said, well, here's his wealth increased from this to that. Therefore, they said, ipso facto, that's income, and he should have been taxed on that. And it's like, well, wait a minute.
And he didn't correct the article when his wealth went down somehow. It's the unrealized capital gains thing. These
they said his wealth increase. They go, no, that's not income. That's an unrealized capital gain. In the same way that I guarantee you, all those people that wrote those articles, that stole that data from the IRS, if they own their homes, the value of their homes is increased. That's an unrealized capital gain. So do they count that? Do they go, I have all this income that I have to pay tax on? No, it only applies to Jeff Bezos. They have these fuzzy definitions. They never actually state specifically what they are. One of my favorite ones on the left is the terminology. They say the working class. And you say, okay, so how do you actually define that? No, because it's like the billionaires that they love to hate. You're saying Elon, who sleeps, for like 6 hours a day, works 7 days a week. So Elon doesn't work. All these guys, who actually go and build companies from scratch, they don't work. They're not a member of the working class. So it's like, no, apparently it's okay. What is a working class? Is it somebody that works on a hourly wage? Okay. So you're saying like a police officer then who makes an annual salary, is that not a member of the working class? A firefighter is not a member of the working class. A teacher that earns an annual salary is not a member of the working class. Does it have to be somebody who does like physical labor then for a living? Does that mean a longshoreman who makes $200,000 a year? Is a longshoreman a member of the working class? What about a doctor who's a trauma surgeon in the ER who doesn't sleep for 2 or 3 days at a time, but makes $250,000, $300,000 a year. Is that a member of the working class? Like they never actually define any of this stuff. It's whatever it is that I think. It's like the definition of a woman, right? It's whatever I feel that it is right now. That's the way that the left always operates. And they just invent all these things. And it's my very long way of getting back to Stephen Miran and saying they just invented, say, these other countries aren't paying their fair share. And they just invented this new math and said, well, we think that any country that has a trade surplus with the U.S. or the U.S. has a trade deficit with that country, the only way that's possible is they're screwing the U.S. And the only way you make $1 billion is by taking $1 billion, by screwing the working class in whatever way we define the working class, right? And it's just ludicrous. You go, or maybe that foreign country is just creating some products and services that American consumers want to buy. Maybe that's the reason. And maybe that other country doesn't have enough money to buy US-made products and services because the US-made products and services tend to be higher value, ergo more expensive, and they can't really afford it to buy that stuff in as much quantity. So, but they just go, oh no, they're screwing America. I said this before that some of the points are valid, and I said when they complain that other countries aren't paying their, I don't want to say their fair share, but literally their contractual obligations for their own defense, I think, yeah, that's a valid point. That's absolutely a valid point.
So this was the case where European countries are supposed to spend 3% of their GDP on defense in order to be part of NATO, so that the U.S. will
protect me. Yeah, America protect me from the country that I buy natural gas from. And in that respect, I think Donald Trump was absolutely right in his first term when he came and said, this is crazy. Why am I protecting you from Russia? And you do these huge natural gas deals with a guy I'm supposed to protect you from. I'm spending U.S. taxpayer dollars to keep tons of troops in Germany to do what exactly? Why are we doing this? This doesn't make any sense. And frankly, I think he was right about that. But the moral of the story is that both sides have valid points, right? I think the administration has a valid point when they say China doesn't really play by any rules. They steal intellectual property. They do all these things. I mean, Russia's done a lot of very dastardly things, including obviously the invasion of Ukraine, all these things. I mean, it's like you can't be the only one that follows rules and then your counterparty doesn't follow rules. So like, I get that. But then again, the Europeans would say, hey, dude, we look the other way when your senile former president was shaking hands with thin air and sniffing the heads of children and doing dirty deals through his son and all these bizarro things, wandering around on stage aimlessly, not having any idea where he's going, having to be sort of bold and directed by Barack Obama, the humiliating withdrawal from Afghanistan, running a $36 trillion national debt, running $2 trillion annual budget deficits, empowering Tony Fauci to be the Lord protector of everybody in the United States and telling everybody to stay home and cower in fear and not go to work and go into debt to do it. And everybody, the rest of the world just looked the other way. And so they go,
that didn't make them want to stop buying U.S. debt.
Right, exactly.
But
all
suddenly,
that, they still bought U.S. debt. And so Stephen Miran says, well, the U.S. debt costs us dearly. Having the world's reserve currency costs us dearly. He says, we provide this reserve asset to the rest of the world, and there's a significant consequence to us. Now, what he's forgetting is that there's also a huge benefit. There's a massive benefit to the United States because no other country could get away with a $36 trillion debt. And the rest of the world says, okay, we'll just keep buying your bonds. Nobody else gets away with that. And that's the benefit. And it's a massive benefit. But he is right in that there is a cost. He's ignoring the benefit, but there is a cost. And the cost, I don't know if I can share my screen here, but there's something that he wrote months ago. We've written about this. We wrote about this a couple months back. And it's something here called what's called a user's guide to restructuring the global trading system. And he writes this, and there's an economist, a fairly obscure economist who's actually making a comeback now. I've been writing about this guy for years. I mean, literally 10 years I've been writing about this gentleman. His name was Robert Triffin. And Robert Triffin was an economist who lived he was kind of, his prominence is sort of in the I think 40s, 50s, 60s. And he posited this thing, it's called Triffin's Dilemma. And Triffin's Dilemma is at the end of the day, it basically says you just can't be the world's reserve currency forever. And the reason why is if you're the United States, the US dollar is the world's reserve currency. That means the rest of the world has to have US dollars in order to be able to trade. And remember, the reserve currency is used not just when they trade with you, but when they trade with each other. And he writes about this in his article. He's like, when Micronesia and Polynesia trade, which is geographically kind of a bad example, but I mean, you could even say like I mean, Australia and Japan trade with one another, they're going to do that deal in US dollars. None of that has anything to do with the United States. It's Australia and Japan trading, electronics for iron ore, whatever. So they do that deal in US dollars. And so because of that, it means that both of those countries have to have US dollars. Well, where are they going to get those dollars from? Well, the first sort of stroke of flooding the world with dollars was the Marshall Plan. That was one of the big things, is that the U.S. gave all these countries, said, there you go. It's Oprah Winfrey. You get a house, you get some dollars, you get $1 billion, and that's what they did at the end of World War II. They gave all these countries around the world just a big fat stack of dollars and said, get started with this, and you can use those dollars to trade with us. And then over time, what ends up happening is that if they're exporting to the U.S., right, they have to have more dollars. They have to have more dollars. And so the point that both Robert Triffin made and Stephen Miran echoing that is that at a certain point, when you start that kind of infrastructure, you start that whole plan, you've got the U.S. as sort of like the dominant economy in the world. But over time, the rest of the world grows. The rest of the world GDP grows, and the U.S. economy as a percentage of the rest of the global economy actually gets smaller and smaller and smaller. It goes from 40% of global GDP to 15% of global GDP, right? So the US percentage of the global economy is actually shrinking. And what that ultimately means is that the rest of the world then needs more and more dollars, right? Because they're more prosperous, they're trading more. And if they're trading more, by definition, they need more dollars to trade because the dollar is the reserve currency. Where are they going to get those dollars from? The only place you can get dollars from is the United States. If you need, the world needs more and more dollars to keep up with global growth. And the global economy is growing faster than the US economy. So in many respects, what that ultimately means is that the US money supply, those foreign US dollars, that supply has to keep growing at a faster and faster rate. And realistically, you can have more Marshall plans and things like that, but ultimately the way that happens, the way the US creates more dollars and floods the world with dollars is through running a trade deficit. And this is what Moran's ultimately talking about, what he says the cost to the United States in maintaining the global reserve currency is Triffin's dilemma. It's the fact that the US has to run this massive trade deficit to keep the world supplied with $1 trillion extra dollars every year, the size of the US trade deficit every single year. That's what he's saying. He goes, that's very costly. And he writes about this, and he says, I'm actually just going to read this real quick. He says, the deep unhappiness with the prevailing economic order is rooted in persistent overvaluation of the dollar and asymmetric trade conditions. Such overvaluation makes U.S. exports less competitive, U.S. imports cheaper, and handicaps American manufacturing. The point of the story is he's saying that because the U.S. has to supply the world with these dollars, it's running these huge trade deficits. And because it's running a trade deficit, then U.S. manufacturing declines. He continues, manufacturing employment declines as factories close. Those local economies where the factories are, they subside. Many working families are unable to support themselves. They become addicted to government handouts. They become addicted to opioids. They move to more prosperous locations, essentially vanquishing that community. The infrastructure in that community declines. Governments no longer service it. Housing and factories are abandoned, and communities become blighted. These are all true statements, right? What he's saying is true. It's absolutely true. And so when him saying there's a cost, yes, there's a cost. There's also a massive benefit. There's a massive benefit. And the thing where I think his logic is wrong is that he is envisioning the world like it's the 90s again. That you had all these guys going into the factories, and I mentioned this to you earlier. There's a pretty great show some years ago called Mad Men, and it's about an advertising agency basically all throughout the 1960s, a significant decade of upheaval in the United States. And I'm sure at some point, future content creators like 20 years from now, 30 years from now, will probably make some kind of series about the 2020s. And in the 1960s, it was interesting to see all these companies walking into the advertising agency. And I remember one episode, this guy comes in, and he's like this big company in the US, and they make umbrellas. And it's just absurd to think about who's making umbrellas in the United States. This is insane. This is insane. Who's going to make umbrellas? But that's the world that I think these guys see. It's like they go, oh, the factories in the US close. And you go, yeah. And then AI companies start as a result of that. This is the kind of process of creative destruction, is that the US shouldn't be making umbrellas anymore, dude. The US is supposed to be making grok and super high performance computing chips and AI infrastructure and all these things. That's what the U.S. really thrives and excels at. And all sorts of other things. I mean, it's financial services, it's all sorts of other things that like the US gets really, really good at. And it should be, and this is good for the United States because making umbrellas is a really shitty business. It's low margin. You don't make very much money. You don't have any competitive advantage. Any other idiot can go and start making umbrellas, right? And so it's an extremely low margin, low profit kind of business to get into, as opposed to all these other really high tech, high value services software is extremely high margin. You hire some software developers and you have your cost of goods sold essentially is almost nothing because all of the costs have been baked into that initial intellectual property development. And so your country is so much better off doing this high margin. Like, let somebody else make the umbrellas, man. It's the socks and underwear argument. And so they have this view and they're simultaneously right and wrong. And it's a little bit of Schrodinger's logic in this case by them saying that, yeah, well, we have this big cost. You go, yes, you have a cost, but you shouldn't be making umbrellas. And you also have this massive benefit. And you need to acknowledge that. You need to acknowledge that. And they just don't seem to be doing it.
The next question we had is about this impending or actually ongoing trade war, economic war with China. You mentioned that it's very likely that China is dumping U.S. Treasuries, which is one of the reasons why bond yields are rising, making it cost more for the United States to borrow money. This question is, does that mean the Chinese bought these Treasuries expensively in order to dump them cheaply?
I'm sure that wasn't the reason why they originally bought them. China's accumulated its Treasury holdings over years, decades. I mean, since Nixon went to China in the 70s, I mean, they've been steadily accumulating treasuries for decades. And I don't think anybody over the past couple of decades was saying, hey, you know what we ought to do one of these days? Let's dump these and take a huge loss. I don't think any Chinese leader was ever saying that. So that's not the reason that they bought them. However, the fact that they have this stockpile of US treasuries and the Chinese are faced with this decision, they go, okay, well, the US now have this, whatever the tariff is today. I mean, what did I see? 200 some odd percent. I mean, they're at the point now where they just got to use little kid language. It's 800 bajillion percent, whatever. They're making everything else up. So they might as well just make up the tariff numbers. And the reality is like, what are the Chinese supposed to do? They're supposed to just go, okay, well, all right, we'll just take it in the teeth here. Or they're actually going to go and do something. And so what is an economic war? An economic war is not where one side just lies down and says, okay, you can trample all over me. No, that's not how it works, right? You hit me, I hit you back. So how are the Chinese hitting you back? Well, they have this stockpile of US treasuries. So how can we hurt you? You have $36 trillion in debt. You've got $10 trillion of that you got to refinance over the next 12 months. Over the next 12 months, you got to refinance $10 trillion. So you've got your president of the United States who's publicly been screaming from the rooftops, we need lower interest rates. We need lower interest rates. So what are the Chinese going to do? They're going to say, well, guess what, buddy? I'm going to jack up your interest rates. And I have exactly the weapon of mass destruction to do that. And their weapon of mass destruction is their stockpile of treasuries. Because when the Chinese start dumping treasuries in the market, they go, oh, here you go. Treasuries, everybody, it's treasuries. What ends up happening? Right? It's just this massive supply and demand imbalance. So you have more treasuries, fewer people buying them, which means that the value of treasuries, the price of treasuries goes down. And remember, yields go in the opposite directions, which means yields go up, which is the opposite of what the President of the United States, with the federal government, the Treasury Department, what they want right now. They want lower yields. They want cheaper debt. And then so the Chinese basically said, all right, you hit us, we're going to hit you back. We're going to hit you. We're going to hit hertz, right? And the family jewels. And they make treasury yields go up. So yeah, I mean, did they lose money on it? Essentially, they bought all these treasuries. Many of these treasuries they bought at all-time highs, right? And so now they're dumping them at lower prices, so they're losing money. And come on, that's the first time that a government has lost money in some transaction? That's the first time that a government has deliberately chosen to lose money for strategic reasons or even for economic warfare? It's a war. Of course they're going to lose money. Of course they're willing to burn some lives, burn some soldiers, burn some cash. It's a war. That's exactly what they're going to do. This is not controversial at all. That, oh, wow, China, would they really lose money? Of course they would. Of course they would. And this is just the tip of the iceberg, man. So what are they going to do with that money? I mean, this is where it became crystal clear that all of a sudden you saw treasury yields go up, which meant that somebody was dumping treasuries. You also saw the euro get a lot more expensive against the US dollar, which meant that somebody had a bunch of US dollars, was selling dollars and buying euros. Gee, who would do such a thing? It's the Chinese. All of a sudden, they're sitting on this massive stockpile. They had this stockpile of treasuries. They converted the treasuries into US dollars. Then they sold the dollars and bought euros, and then used those euros to buy European government bonds. So what ended up happening was just essentially a transfer of debt securities from US debt securities to now European debt securities. But now European government bonds, these are going to be heading lower, which will probably be quite a joy to heavily indebted European governments. And US bond yields are going up, which is definitely it's definitely going to make the US government suffer. It's going to make the US economy suffer for sure.
So they're not planning on somehow profiting from this trade somewhere else. This is actually,
No, man,
they understand that they're going to lose money, but that's part of the strategy.
It's war. It's war. It's war, man. It's a war cost. That's all it is.
Does this somehow make the Chinese yuan more valuable? This was another question from the same reader. Are the Chinese willing to make their currency stronger by selling treasuries?
So their selling treasuries has nothing to do with their own currency, right? Whether you want to say yuan or renminbi, whatever, but it has nothing to do with their own currency, right? Because remember, why do they own treasuries? They own treasuries because they run a trade surplus with the United States, right? So China sells more to the United States than the U.S. sells back to China. So the end result is there's hundreds of billions of dollars left over, right, that the Chinese have because they pay the U.S. pays China, and that net balance left over is a couple $100 billion surplus. With China, over time, it's been trillions of dollars that the Chinese have had. What do they do with those dollars? Well, they didn't really bring it back to China and turn it into renminbi. They didn't sell those dollars to buy renminbi. What do they do? Instead, they said, well, we got these dollars. What are we going to do with these dollars? Let's just buy treasuries, right? So you can imagine sort of Chinese companies and U.S. companies, they're trading with one another, and those currency flows basically matriculated up to the central banks and their respective banking systems. But at no point really was there like these dollars really kind of exchanging back and forth into renminbi. At the end of the day, that surplus was held in dollars. It never turned into renminbi. That surplus was held in dollars, and they took that US dollar surplus and they said, let's buy treasuries. Right? So it was US dollar surplus. Now it's US dollar treasuries. Now they sold those US dollar treasuries, turned it back into US dollars, and then sold those US dollars and bought euros. Right? So at no point along the way did any of that turn back into renminbi. They didn't sell their dollars and buy renminbi. Right? If they did that, it would make the renminbi go up. It would make the renminbi appreciate, make the renminbi stronger against the dollar. But that's not what they want. At least not ostensibly, not right now. Maybe they have some long game they're playing, and maybe eventually they want to have a stronger currency in China. But for now, none of this transaction. They had a trade surplus in USD. They traded those USD for treasuries. They traded treasuries back for US dollars, traded those dollars for euros, and then traded those euros for European government bonds. At no point in that process did any of those assets ever turn into Chinese currency. Right? So because of that, there's no increased or decreased demand. There's no change in supply and demand of Chinese currency. So that's why none of this stuff actually matters to Chinese currency.
Along the same lines of what this is going to do to different currencies, if BRICS, this trading bloc, Brazil, Russia, India, well, was it China and then South Africa?
You got supposedly, you got Indonesia, you got South Africa, and you got blah, blah, all these countries.
So if they all started settling their trade with yuan instead of dollars, would that be good or bad for the United States? Obviously, it seems like that would be bad because then there'd be less demand for the US dollar, but this is sort of the Triffin's Dilemma thing.
Yeah, I don't think that China is hoping for its currency to be the global reserve currency. I don't think they're sitting around thinking, geez, I really hope we can have our own Triffin's Dilemma, because that would be a fundamental reset. It would be the same situation that the U.S. was in. China would have to, which right now, runs a pretty significant trade surplus with a lot of countries, including and especially the United States. They do run a trade deficit with a lot of other countries, though, in fairness. But they would have to run massive trade deficits around the world, everywhere, run massive, massive trade deficits to flood the world with renminbi. They'd have to have a Marshall Plan, which they already do to a degree with the Belt and Road Initiative, but they'd have to take that across Europe. They'd have to take it across, all over Latin America, everywhere, Canada, Australia, everywhere, in order to do that. And it just doesn't really seem to be in China's strategic interest to do that. You can't realistically have the global reserve currency and be the world's manufacturer. Both of those things can't really be true. And Triffin's dilemma explains why that is, right? Because if you're manufacturing, you're running trade surpluses, and you can't run a trade surplus and still provide the world with this necessary quantity of reserve assets. So it's not a great situation for China to be in. I don't think they necessarily want it. The other thing is that I don't think the rest of the world wants it. Nobody trusts the Chinese. Nobody trusts CCP, right? Nobody thinks that these guys are exactly honest, Abe. They've got all this sort of dark money debt. They've got all this weird stuff going on in the books they don't actually acknowledge with transparency. I mean, they have their ghost cities. They have all sorts of excess and large S. So I don't think anybody's going to look at the Chinese books and the state of the economy and the state of the government and go, yeah, that's a trustworthy counterparty. Let's anoint them as the global reserve issuer. I don't think Russia trusts the Chinese. I don't think India trusts the Chinese. And the other thing is, obviously, at the moment, at least the renminbi is full of exchange controls. You're just riddled with problems here. You've got capital controls. You can't just freely move money in and out of the system. So you got a lot of problems there. There's been supposedly, last year they started a movement to really try and get more, just in the same way we have the petrodollar, in that oil prices around the world are primarily denominated in US dollars. So people try to get oil denominated in Chinese currency to create a petro yuan. And Saudi Arabia supposedly kind of mulled over that. And this is why we'll write about this more, why I think actually in the run up to World War III, I think Saudi Arabia is probably going to be a pretty key swing vote, and whether or not that conflict takes place. And we'll talk about that more another time. Yeah, I don't think, and this is why gold makes so much sense, because you're looking at this going, okay, the US is unilaterally resetting the global financial system. Nobody trusts China, and China's not ready for it. They don't have the financial infrastructure. They don't have the freely convertible currency without capital controls. They don't have things. One of the reasons why the dollar does remain the global reserve currency is because people who stockpile dollars, there's so many things you can buy. If you're a foreign company, right? Don't even think about governments. If you're a foreign company and you're sitting on a lot of US dollars because of trade, you're just like, let's say you're a profitable company, software company in India, and you're the owner and CEO of this profitable company. You stockpiled $50 million worth of US dollars. What are you going to do with it? Well, man, there's a lot of things you can do with US dollars. You can go and buy stocks in the United States. You can buy real estate in the United States. You can go buy a fancy house in Malibu. I don't know if $50 million gets you a house in Malibu anymore, but maybe, I don't know, somewhere, maybe you can buy a small condo in Miami Beach, whether with $50 million. So all the things that you can buy in the United States, you can't really do that. And what are you going to do? What are you going to do with, $50 million equivalent of renminbi? What are you going to do with that in China? You don't have the same kind of option. Well, kind of, but there's also a lot of restrictions on asset ownership, which is why even the stock market, you've got classes of shares and all these sorts of things. It's just too many issues, too many complications. So the US dollar still has a lot of advantages, and China's just not ready. So many people look at this going, man, this is sort of the destruction of the Bretton Woods system. Bretton Woods 1, Bretton Woods 2, since 1971. This is the destruction of that. What's next? I don't know. And this is why people are piling into gold, including and especially foreign governments and central banks. And again, I don't say that as a gold bug. I'm saying this as a rational human being who can see there's a clear and obvious catalyst for gold prices. And now what we're seeing is that there's that surge in gold price. I think investors have finally woken up to the fact that high gold prices are really, really good for gold companies. Really good for gold companies. And so now we see the share price of gold companies going through the roof. We were saying this for months and months and months. We were telling everybody, you need to buy gold companies, you need to buy gold companies. This is an obvious opportunity. Wow, what a surprise. Gold companies are up through the freaking roof.
All right, we have one final question, and it's sort of about where information is coming from these days, because it's been a pretty confusing couple of weeks. And I know when you write things and when we talk about things, you like to go back to original source documents. We talk about the speech that Stephen Miran gave. We talk about a paper that he actually wrote. Is there somewhere people can go and just get reliable information?
Yeah, look, it's always primary source. You always got to look at primary sources, like reading some stuff in the news. I like the Wall Street Journal just fine for the most part, but there's no substitute for primary sources. You've really got to go and look. And so, people talk about tariffs, they talk about Stephen Miran, but there's no substitute for actually going and seeing what the guy wrote. And the nice thing about Stephen Miran is he's actually pretty succinct. He's very succinct. And, he lays it out. I think everybody should read the the speech that he gave. It's actually on the whitehouse.gov website. And this is Steve Miran, Hudson Institute event remarks. Council of Economic Advisor Chairman Steve Miran, Hudson Institute remarks. And this is from 9 days ago. Take 5 minutes to read. It's absolutely worth it. And it lays out what appears to be a kernel of strategy. The media is completely useless in this. What was it you were telling me before? You read somebody was saying.
Oh, was this about the court case in the UK?
No. The thing you're saying, like everybody has like some kind of domain expertise.
Exactly. There is whenever you read a newspaper article about your particular industry, and you go, this journalist has no idea what they're talking about. And then you read other articles about other people's industries and you go, well, I assume this is correct. And it's like, no, every single time they do that, they're just, kind of.
They get it wrong.
Yeah.
Yeah. My sister was a journalist at one point and she used to cover NASA. She was living in South Florida. She was covering NASA, and my sister is incredibly smart. And so she would, oh my God, she would study. She basically got like an honorary master's degree in astrophysics, just studying everything there is to know about space travel and all of that. And so she would show up and would like interview the NASA director, NASA administrator. And she was the only person that actually did her homework, and everybody else kind of raised their hands, asked these just moronic, imbecilic questions. And then they'd write about it in this completely moronic and imbecilic way. And you see this a lot, and especially in topics that are very complicated, like, space travel, rocket science.
Federal Reserve too, though. Remember, everybody just watches the Federal Reserve meetings and then just go, okay, this is
not along. Oh, yeah, okay. Oh, we can't, that's going to, because nobody wants to look stupid and nobody understands central banking. So you got some reporter, some guy from, whatever, Washington Post, HuffPo, shows up to like a Federal Reserve meeting, has no earthly idea about anything about central banking. So they just kind of nod along obsequiously. So, okay, yes, Chairman Powell, and it's all, and nobody really, there's a few people actually ask a few tough questions, but it's, again, there's not really any substitute for actually self-education and primary sources. The one you're talking about just today, like this news break, you see it all over the internet now, is they say UK Supreme Court says that, men are men and women are women and all this kind of stuff. And it's like these big headlines about this. And I think a lot of people on the right are looking at this massive conservative victory that the UK is backing off of the woke ledge. And that's actually not what the decision was at all. And I can see why people wrote about all this, because like one news outlet wrote about it. And so everybody else, this is the way the industry is. Nobody wants to get scooped, right? And so everybody has to put out their content. And they're just using like the original guy's article. And it turns out he didn't actually read the court opinion because it's 88 pages and that's going to take a lot of time. So I actually took the time, and this morning I actually read the entire friggin' 88 pages, and you have to get to the very bottom, the very, very bottom. And I'm looking at my phone right now, and it's basically saying, first of all, like the entire UK Supreme Court decision, it was so apologetic. It was, oh, we're so sorry. We have to rule on this. And they went on and on and on and on. At the very end, they say, we know this is a very long opinion, but we felt compelled to actually have to explain all these little nuances and things like that. Because, yeah, like, they probably don't want to get beat up, next time they're crossing the street by some angry woke mob. But at the end of the day, they did say that, men are men and women are women. But what they're saying is the context was specifically, there's this section and this paragraph in this particular law where they talk about gender. And our ruling is that in this section, in this paragraph, in this particular law, that by gender or sex, they mean only biological sex. In this particular extremely narrow and limited context, that sex means biological sex only. So you wouldn't know that by reading the headlines and seeing all these articles go, oh, the Supreme Court said whatever. But again, this is just another example of reporters being A, very lazy, or B, not having an idea what they're talking about. And so you actually have to go through and dig through 88 pages to get to the very end and read this stuff and go, man, it's not what the headlines are really saying. And so you better believe it's the same thing with tariffs. It's the same thing with central banking. It's the same thing with a lot of this stuff. A lot of this commentary is, it's just by people aren't doing really the full homework and research. So, yeah, I mean, don't even listen to me. I mean, I encourage everybody to go out and do your own research, your own homework, and there's no better source than the primary source. Go directly to the source.
Great. Okay. Thanks, James. Appreciate it.
All right, bud.